All right, let's talk about March 11th. The Indian market took a massive tumble, and it was a day of widespread selling that honestly caught a lot of people off guard. We're going to break down not just what happened, but more importantly, why. For some of the biggest names on the exchange, the day was an absolute bloodbath. I mean, a nearly 5% drop for a market heavyweight isn't just a bad day. That's a huge red flag. It signals a sudden and pretty dramatic shift in how investors are feeling. So, what in the world triggered this huge wave of selling? And what does it tell us about where the market might be heading next? Let's get into the real story behind all those red numbers. Okay, let's zoom out for a second and look at the big picture. This wasn't just some random bad day. It really looks like the market has entered what analysts are calling a strong corrective phase. So both the Nifty 50 and the Sensex, the main market benchmarks just tumbled. They were really pulled down by the big heavyweight financial stocks. This sell-off was so powerful, it smashed right through key support levels. You can think of those as price floors that everyone thought were solid. Well, turns out they weren't. And just like that, the whole vibe, the whole sentiment of the market turned very, very bearish. So here's where it gets really interesting. We got to understand the technical triggers behind this sudden drop. Why did the selling spirals so fast? The charts, well, they tell a pretty fascinating story. It all starts with something that technical analysts call bearish patterns. Now, you don't have to be a chart wizard to get this. Just think of them as big warning flares popping up on the price charts, basically shouting at traders that a downward move might be just around the corner. And on March 11th, we saw some really powerful signals. You get these patterns with some pretty intense names, like bearish Marubozu and bearish engulfing. Now, without getting lost in the jargon, what you really need to know is that these are strong signs that the sellers have completely taken control of the market's momentum. And all this pressure created a perfect domino effect. It started with the heavyweight stock stumbling. That pushed the market right through those key support levels we talked about. And in turn, that break confirmed the bearish chart patterns, which was like a green light for the big foreign institutional investors, the FIIs, to start selling. And that just poured gasoline on the fire, a classic selling cascade. It all boiled down to this one simple, pretty brutal market mantra: sell on upticks. What that means is that every tiny little price recovery, any little hint of a bounce, was immediately smacked down with more selling. Traders weren't seeing signs of a comeback, they were just seeing a chance to get out. Okay, but even in all that chaos, it's never the same story for every single stock. So let's zoom in a bit and see how this played out for individual companies, because you get two very different stories here. Yeah, even in a crazy sell-off, the market is never a monolith. You've got some of the big guys, like Bajaj Finance and Axis Bank, who just got dragged down with the trend. But then you've got this small handful of fighters, like Geo Financial and Blue Star, that somehow managed to swim against the current. All right, first, let's take a look at the bears, the stocks that got hit the hardest by all that intense selling pressure. And a prime example here is the financial heavyweight, Bajaj Finance. When a player this big makes a move, it tends to have a major ripple effect across the entire market. The stock didn't just fall almost 5%, it fell on high selling volume. And that short build-up part, that's the real kicker. It means big investors were piling on bets that the price would continue to drop even further. That combination is an incredibly powerful bearish signal. Next up, we've got Axis Bank, which was basically a victim of its neighborhood. It got caught in a downdraft that was pulling down the whole banking sector. This wasn't just about one company's problems. So the stock dropped over 4%, breaking through its own support levels. But the really crucial insight here is that its fall was part of a larger bearish pattern that formed across the entire banking index. In other words, Axis Bank was caught in a much, much bigger storm. But hey, it wasn't all doom and gloom. Even on a day like this, some stocks showed some really remarkable strength. So let's flip the script and go find the silver linings. This chart just perfectly illustrates the concept of relative strength. You can see the overall market, the Nifty 50, deep in the red. But then you look over at Blue Star and National Aluminum, and they're having a great day. It just goes to show how some companies can totally thrive, even when the overall market is in a panic. Now, this is pretty incredible. In the exact same financial services index that was getting absolutely hammered, one stock, just one, actually finished the day in the green. And here it is, Geo Financial. While all of its peers were plunging, it actually gained over 1%.
I mean, to be the only stock in the green in your entire sector during a sell-off like that, that shows some serious, incredible resilience. It definitely makes it a standout performer to watch.
And finally, let's look at two other companies that showed really impressive momentum, almost like they were completely detached from all the fear in the market. Both Blue Star and National Aluminum saw a lot of strong buying interest. For Blue Star, that phrase, high delivery-based buying, is important. It suggests these aren't just day traders, these are long-term investors accumulating shares. And for National Aluminum, positive price volume action is just a technical way of saying that its price jump was backed by a huge number of buyers, confirming there was real demand. In both cases, investors seem to be betting on the underlying strength of the business itself. So, when you put it all together, after a day like this, the big question is, what happens now? What are the key things we need to be watching for moving forward? Well, analysts are now laser-focused on these specific numbers. For the Nifty, 24,600 is kind of the ceiling they're watching. If the selling continues, the next floors are at 23,800 and then possibly all the way down at 22,800. And for the banking sector, a close below 47,700 could trigger a whole new wave of selling. These are basically the battle lines for the coming days. And all of this brings us to the one big question that every single investor is asking right now. Was this just a temporary storm, or is this the start of a whole new, more challenging season for the market? For now, I guess only time will tell.